Hello and welcome to Car Dealer Live. My name is James Batchelor, and today we are taking our monthly look at used car values. Joining me is Cap HPI's Director of Valuations, Derren Martin. Hello, Derren.
Hi, James.
Always good to have you on, Derren. Thanks for joining us today. So let's crack on with it then. August. How did it perform then?
It's been another strong month. We've values have dropped only slightly. The headline figure is 0.6%, which is about £140 at 3 years old. Similar percentage at 1 year old, slightly more on older vehicles, but again, nothing seismic. That is actually in line with sort of normal seasonality for the month as well. But what is different is that we've had this strength since kind of May. We've only dropped values over a 4 month period by 2% in total, so 0.5% a month is a really, really small movement overall. What we're finding is that demand from retailers is quite strong. Their demand from consumers hasn't dipped away too much with the holiday season. They are dealers we speak to, they're either saying it's okay or they're saying it's better than normal. Some are saying August was better than July, which is quite unusual as well. So what they're doing is they're dipping back in to buy stock because they're not overstocked because of stocking charges, interest rates. So they're replenishing. And when they go to replenish, with those sort of 3-year-old prime stock cars, there's not loads of them about because 3 years ago we were in the middle of the semiconductor crisis. 4 years ago we were in COVID, so you've got 2 years of low registrations there, and now in the used car market that's kind of coming home to roost a little bit. So you've got a very stable market because supply levels are not too high and demand is still there, so it's just keeping things nice and steady.
Mm. I know you mentioned there that we're sort of back to sort of seasonality, but listening to what you were saying there, I'm still surprised that it's still quite stable, even with those factors that you've just said. Because I just thought that you know that demand would have just petered out a little bit during the summer, but clearly that's not the case. There are still plenty of buyers out there wanting used cars.
Yeah, the consumer demand seems to have to be, as I say, better than normal for some. It's all going quite well. I think what you've also got in the market is that very well documented in the final quarter of last year, values dropped by over 10%. That took some of the heat out of prices. It feels like ever since then, prices have been kind of palatable for dealers to purchase and palatable for the consumer. So we haven't seen a massive amount of sort of repositioning on the retail side either. So yeah, demand is steady. It's been better than expected over the summer. I think retailers would agree with that. And yeah, the supply dynamics have kept things nice and steady as well. And pricing wise, we had that realignment, and now they've just dropped, yeah, very very slowly over the summer months. And normal deflation in value, that is a normal thing. You tend to get that during a year. So for it to only be 2% over a 4 month period is really really steady. Obviously, I'm talking averages around all of this, and you have lots of different things going on in the market, and you can have values going up and down and staying level for different vehicles, and that has still played out. But overall, pretty stable.
Mm. I'll come on to that different vehicle sort of bit in a second. But I mean, what are dealers tending to tell you at the moment? I mean, are they having to change their stock profiles a little bit, or is it still a case that they are still hunting out the very best quality stock so that they can try and shift it as quickly as possible?
Yeah, those are still the sweet spots. For the majority of dealers, anything sort of below £20,000, petrol vehicles are still massively in demand in good, clean condition. They don't want to have anything that needs a bit of work. So it's probably worth for the in the remarketing side to refurbish your cars. The cap clean cars are selling. We are seeing the older cars, the higher mileage, the damaged cars selling, but they've struggled a little bit more than anything else this year. They might need a little bit of refurb before they sell, or they need to be readjusted in price really to sell as well. So dealers aren't so keen on those. So it is still, yeah, the standard sort of petrol, small super minis, city cars, lower medium vehicles, your smaller SUVs. petrol vehicles. So that they are still selling well. Obviously, diesel is now a bit more niche, but they continue to sell well as well. When you track sort of days to sell in our retail data, they all do well. I guess the interesting part of that is electric vehicles, where electric vehicles under £20,000 do seem to be going well. So we track it sort of by age as well, and that sort of 3 to 4 to 5 year old EV selling pretty quickly off retail forecourts, actually selling quicker than petrol.
Mm.
But once you get to the newer electric vehicles, they're then competing with some of the new car prices, and they don't sell as quickly. So you've got very much sort of different tiers in the EV market, but below £20,000, you've got some really good cars in there as well that are now at those really real sort of sweet spots. So they seem to do okay. Yeah.
Yeah, I mean, well, just anecdotally, I mean, I've been helping a friend of mine buy their first used electric car, and sort of their budget is sort of around £15,000. And I was absolutely, even though I write about it most days, and we talk about it on the podcast and what have you, and with you every month, I was still staggered at the level of value you can get around £15,000 for cars not that old, still like 3 years old. Used electric cars. I mean, anything really is in that sort of that bracket. And I mean, now really is a great time to be buying a used electric car, isn't it?
It really is. As I say, they sell quicker off the forecourts. We see bigger margins for electric vehicles. So talking trade here, so it's definitely a good time for them to buy. We don't. We've done some analysis on our retail data, and you can see that independents, only less than 20% of independents have advertised an EV over the last 6 months. So there's 80%, over 80% aren't stocking them and advertising. Obviously, they might have some sold orders, but they're not really dipping their toes in with this. And we see less than half of franchise dealers have advertised one as well. So there's a lot more that could be done from the retailers on these. But yeah, price point wise, I mean, you can get a Tesla Model 3 for £16,000 now. If you want to go cheaper, you can get a Corsa electric at 3 years old for a sort of £8,000 or £9,000. Nissan Leafs for £8,000, and some really nice cars. Audi e-tron at £18,500 we've seen. So there some real sort of sweet spots there. Once you get more expensive, it's more difficult to shift them off the forecourts, and there's not so much demand from the consumer. So, but for those, your friends are a prime example. Then going in at that sort of price, first electric vehicle, I'm sure they'll find that it works for them, and then they'll be in the EV market. We've already seen more EVs sold this year than in the whole of last year in the trade market. So they still need to, there's more to come. But there are a lot of these cars selling. But there's also a big opportunity for dealers that aren't stocking them at the moment, and to go for those sort of sweet spot cars if they can't get as many petrols as they once could.
Yeah, I mean, I have to say, I was I was quite surprised with what you just said there in terms of the stats, in terms of the independent dealers and the franchise dealers not selling a huge number of used electric cars. I mean, is it still the cliche? Well, not cliche, but the reasons that we've heard a lot of in the past, which is it's just easier to sell petrol cars at the moment, and and it's easy to sell things which dealers have got experience of.
There's definitely that. I mean, you can sell a petrol car. You're used to that. You've always done it. People still come in for petrol cars in vast numbers. There's not so many people coming in for electric vehicles, so you don't want to overstock on electric vehicles, but to stock them. But I think one of the key things is that we've over the last 2 years we've dropped values every month for the last 2 years now, and over that period of time they've come down on average by 60%. So most EVs are now cheaper than their petrol equivalents. But dealers are wary because that's what happened in the past, and is that likely to happen again? There's some concern about the fact that the EVs dropped so much, and if you had one 2 years ago in stock and it came down so dramatically around that time, you had your fingers burnt. So I think there's a little bit of trepidation there. There's still some volatility in the EV pricing world. Those ones I've mentioned, they're kind of fine, but you've still got some that look a little bit too expensive. You've still got some that are dropping in value. So there's a little bit of trepidation there. So you need to be careful with what you buy. Don't just go out and buy EVs for the sake of buying EVs. And yeah, this month we've dropped some in value by fairly reasonable amounts again, but there's some that have stayed level for a couple of months now. So it's worth looking at the detail within the figures to see what you think will sell well, but worth dipping in there. But yeah, I think it's the always do the what we've always done kind of scenario, but also the trepidation of what's happened in the past.
Hmm. Finally, Derren, I mean, we're moving into September, of course, plate change month, moving into Q4 very shortly. And of course, we've got the ZEV mandate for new cars. I mean, what kind of effect do you think this might have on the used car market? And is it going to make used electric or nearly new used electric cars more volatile in terms of pricing? I mean, what do you think the outlook is for the rest of the year?
Yeah, it's so for September, we're going to have another stable period, we think. Yeah, values will not move by much as we head through September, because you won't get the volume coming back from the plate change. That tends to come through late in the month or even into October. So any volume will probably be more from the fleet market as well, rather than part exchanges, because the new car retail is not doing particularly well. Any part exchanges that come in, retailers are probably looking to hang on to as many of those as possible rather than trade them, because that's good stock for them. Fleet wise, yeah, there will be some stocks coming through which could affect the market, but probably not in September. So we think stable September. Once you start getting into October, November, December, yeah, last year values dropped by 10.5% in our live product in those 3 months. We don't think that's going to happen again. We're pretty sure that won't happen again. That felt like a really good realignment, almost not good, but yeah, realignment of values. Ever since then, they've looked reasonably priced. When you start to throw things like the ZEV mandate in, it's as soon as you're mandating stuff to an industry, it causes volatility, and it can cause volatility in the used market and as well as the new market. It's going to be really interesting to see what happens, because you will get some more discounting on electric vehicles, which can affect nearly new. But those nearly new electric vehicles now are quite a long way away from list. They've already been adjusted down, because we've seen quite a lot of discounting already, and you can't sell a used one for more than a new one generally. So that's already happened. It depends on their proximity there, whether that will affect it. It could do. But on the ICE side, if manufacturers move away from selling ICE cars in the final quarter, that could lead to a bit of strength for petrol cars. You might get people who don't want an EV, can't get a new one, going into the used market. So I think there will be some pricing realignment. There generally always is in quarter four, because there will be more cars coming back in, but it will be nowhere near as much as last year, and it will be fairly gentle. I also think you've got the dynamic of dealers that will be looking to buy to stock up for January. That didn't really happen last year. I think this year it will happen in higher numbers. So yeah, lots of different dynamics to play out, but the ZEV mandate is the main one, and what manufacturers do, because I think only 4 mainstream manufacturers that are selling both ICE and EVs are currently hitting that 22%. Obviously, there's other ways of hitting your targets with CO2 and borrowing off the future or buying off other manufacturers, but at the moment there are only 4 that are hitting it, and some of them are miles away from it.
Yeah, I know, and it's something that we've been looking a lot at, and I think we're all in agreement. I think the end of the year is going to be a very, very interesting one, possibly for the wrong reasons, but it's still going to be interesting nevertheless. Derren, thank you so much for joining us today.
No, it's an absolute pleasure.
Well, that's it for today's Car Dealer Live. Join us again very soon. Bye-bye.